Good morning, traders. It is Tuesday, May 10th. Let's start off with my last pick of the day. I recorded this 2 hours before the open, got the video out an hour before the open. You had ample time to be able to short the open on Friday. NUE was my pick of the day. Stock opened at about $140. Yesterday, it traded down to about $130. $10 winner in 2 days. Awesome trade. Relative strength, relative weakness. That's what we trade. Also, market first. So we're going to start out with our market analysis in just a second. So let's take a look at what the market is doing. As I mentioned to you on Friday, I saw some really bearish signs. So I'm going to go through it as quickly as I can. This is the last FOMC statement right in here, March 16th. You can see how Tuesday before the statement, buyers were already coming in to buy this dip. You can see that the market had been making higher lows. That was also encouraging. That rally lasted about 2 weeks. Back in here about a week ago, it looked like we might have a similar pattern where we come down and we test, and then we get maybe a little bit of excitement heading into the FOMC statement. That's not what happened, and that was a warning sign. We had heavy selling the Friday before. Monday, just before the FOMC statement, we had a bullish hammer. But you can see on Tuesday, we didn't have any follow through. Then we did get a little bit of a relief rally on Wednesday after the FOMC statement. Remember, this rally lasted 2 weeks. This rally lasted about 2 hours. When we came in Thursday, whap, they nailed it right off of that high and they never stopped selling. This is why we were bearish on Friday morning before the open. I expected that the market was going to take another leg lower. That's exactly what happened Friday. You can see how we closed in the middle of the range, but we were definitely probing this support level here. Yesterday, Monday, the bottom fell out. So right now, this is a very bearish looking chart. I'm going to zoom out very quickly, take a look at the longer term chart. If you take that high and that low, the S&P 500 has retraced about 16%. Mind you, 10% is correction range. If we go in and take a look at QQQ, tech stocks from that high to that low, they have already retraced about 27%. That is bear market territory, IWM. Russell 2000 from that high to that low also have retraced about 28%. Folks, those two indices are in bear market territory. The SPY is still hanging in there, but now we've started to crack support. So what happens after you've had a bull market for the last 10 years? Look at that strength. Go into a monthly chart. Look at that monthly chart. Parabolic even. Huge rally. Well, bull markets like this die very hard. There's always a bid. Everybody has been conditioned for many, many years. Buy the dip, buy the dip, buy the dip. So every dip that the market's presented with seems like a buying opportunity. So in the initial phases of a market pullback, everybody is still in that buy the dip mentality, so the bid remains very stubborn. But eventually, buyers recognize that the selling pressure is heavy and that they'll have an opportunity to buy at an even lower price, so they stop bidding for stocks. And then the next leg and the next leg lower start to really accelerate. I believe we're at that juncture right now. So let's go back into the daily chart. Now that we've cracked this support, and remember, we've had lots of volatility in the market. You can see how we had a tiny little pullback off the high and then up 60, down 60, up 60, down 60, back and forth. So that bid is still remaining very strong in here. A lot of overlapping candles, but there is a general downward bias. So now we get ka-chunk, ka-chunk, big drop, and then we go through that same type of massive volatility while the bid is still there. There's still some buying interest. Buyers have not thrown in the towel yet. And then finally, we get this horizontal breakdown through support here. Now buyers are going to really be taking a step back. If you're an asset manager looking to place money and you think that this is the last opportunity that you're going to have to buy, and then you see a breakdown like this, you put your wallet back in your pocket and you go, I don't need to be buying in here. In fact, if this was going to be setting up for a nice FOMC relief bounce, we would have seen lots of excitement, maybe even challenged the 50-day, maybe the 100-day moving average, and then backed off. We didn't see that. In fact, sellers were taking advantage of the opportunity that there might still be some buyers looking for that little relief bounce. So while the going is good and those bounce buyers are still out there, wham, 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 hit those bids. Hurry up, unload that stock as fast as we can. The other thing that happens is that you have lots of investors who have market exposure right now because you can't make any money in fixed income. Those yields aren't even keeping pace with inflation, so you're generating negative real returns. We have an aging demographic who should be diversifying their portfolio and carrying less risk. Well, as long as the market's going up, they're going to keep their money in the market. But as soon as you start having a 10, 15% correction, they're going to start getting out of the way. A lot of people that went through the financial crisis in 2008, 2009 still had 10 or 15 years worth of earning power. So that hit didn't hurt them as badly because they were still going to be employed. But in the back of their minds, they're thinking, whew, I'm never going to let that happen again. And so I think we're going to see another wave of people getting out of the way of this market, especially while we have higher interest rates. A little bit of news that's come out overnight is there's some concern that on May 25th, Russia is going to default. Could there possibly be some credit issues? Conditions in China are deteriorating from an economic growth standpoint. 340 container ships off the port of Shanghai. They're still in lockdown. They're trying to get out of that lockdown. You have probably another 50 basis point rate hike coming by the FOMC in just another month. So that's another shoe that's going to be dropping. Inflation's still super hot. Lots of issues for the market to navigate. So we have this breakdown here. I am bearish. I believe that we're going to continue to fall. Well, Pete, how far might we fall? What I can tell you is that until we see a capitulation low, the bottom of the market has to drop out, and we have to have that gut wrenching, oh my God moment. And then we have to see a massive snapback rally with follow through. Then we can start thinking about taking some long positions. Until we get to that point, you have to be positioned on the short side and you have to expect that you're going to have volatility. So we had a nice sell off yesterday. We've got about a 25, 30 point S&P rally overnight. So we're going to see a little bit of a relief rally. And I believe that that is going to set us up with an opportunity to get short this morning. So yes, NUE, beautiful trade. Let's see what else we can find for my pick of the day. And I'm going to bring in custom search. Before I do that, here's something that we currently have going on. All of the searches that I have are arranged so that when market conditions warrant, you're going to see a lot more opportunities on the short side than on the long side. That tells you which side of the market you should be focusing on. The difficulty is when you have so many stocks to pick from, how do you knock through these lists? And you can start adding filters, H1 sell signal, H2 sell signal, D1 sell signal. Okay, well, this is going to help. But I still have a very long list. You could knock through this list in probably 10, 15 minutes, and you're going to find a dozen, maybe 20 super, super good stocks. But I'm going to use a little bit different approach. And again, I'm using Royal Flush here, which is looking for sell signals on the stock across all time frames. By the way, if I go into my market signals for the S&P, these two time frames, M15 and M30, are between signals, but you can see how everything else is solid red. QQQ, solid red. We are definitely going to be looking on the short side. This is what a royal flush looks like for QQQ. Very nasty selling in tech. So I'm going to bring up a search, and we're going to add a lot of variables. And we're going to try and find a stock that's still got some room on the downside. I'm not necessarily looking for something that has been pounded mercilessly into the ground. And I'll show you how I can weed out those stocks. So first of all, let's find a stock that is weak relative to the S&P 500 on a daily basis. Relative weakness, that's what we trade. Market first, stock second. Stock should have relative weakness. Next, we're going to look for a stock that's been in a compression and now it's out. And that compression has been resolved to the downside. So when you have a compression, it's like a coiled spring waiting to release. In this particular case, that spring has released and the stock has released to the downside. We're going to go down to algo line breached, and I can use new, which is just a new variable I'm testing out, or I can go into the old algo line breached. And finally, we're going to go down and take a look for stock that's got excellent option liquidity. So we know that today's pick, you'll have some availability to trade options on it. And here's a variable that I added. I want to see the stock at least above the 50 percentile of its 60-day range. So if you think about what's happened in the market during the last 2 months, sell, 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 lots of stocks being pounded, 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 driven down. Well, I want a stock that still has some room to go on the downside. So it is not on its 60-day low. And when I run this search, I only have a few stocks to take a look at. So one of these is going to be our pick of the day. So I'm going to move this off screen. We'll take a look at them, get you your pick of the day. So go into a daily chart, DAL. You can see the upward sloping trend line right here. You can see that beautiful breakdown right here through the 200-day, through the 100-day, through the 50-day, closed below the 50-day moving average. These are going to provide some resistance for the stock. In this particular case, you can also see how the stock gapped up. That was a resistance level. Now it's support. So we have horizontal support also breached. Stock fills in that earnings gap. I really like DAL. Could be my pick of the day. SWN, you can see here, upward sloping trend line, breached yesterday to the downside. Horizontal support also breached. $7 stock. Yes, I think it's got a good chance to come down to that 100-day moving average. So from 650 roughly to 575. Yeah, that would be a very nice move. Final pick, UAL. I believe all of these stocks are going to set up a really nice opportunity. I like the fact that UAL has a little bit more room on the downside. You can see how far that stock can fall down to the $31 level. So this morning, we are going to get a market bounce. Here's what you'll be looking for. As the market rallies, we want to see a lid on UAL. We want to see UAL staying below that 50-day moving average. We want it below that 100-day moving average. If the market rallies on the open, I believe we're going to get a little bit of a relief rally. So let's go in and take a look at the 5-minute chart. So the market's going to open somewhere around the 402 level. So right in here. But as the market opens, I believe you're going to see the bid gradually crumble and be tested. Again, on a longer term basis, we're not going to see a substantial market rally until we hit that air pocket, until we have that capitulation low. I'm certainly not expecting much of a market bounce between now and the FOMC statement in June. We've already had earnings season, so that catalyst is gone. Inflation numbers, CPI, they're coming out this week. They'll probably be a little bit better than feared, but not enough to really produce a big market rally. With all the dark clouds that we have, I'm expecting a little bit of a rally, and then after a heavy round of selling like we had yesterday, gradually the sellers will come back in. Maybe it takes half an hour, maybe it takes an hour, maybe it takes 90 minutes. Eventually, those sellers are going to be coming back. And what I want to see UAL do is I want to see it continue to sink from its opening price. Let's go into a 5-minute chart. I'm going to take off the 1-0 squeeze indicator, but to show you what that looks like, this is a compression when you have yellow dots. Gray dots means that it's out of the compression. If you ever see yellow dots and then a green dot, that means that it has blown through the upper end of that compression. So in this case, it just happened to slide through the lower end of it. We're going to remove that indicator and we are going to put up 10 SI, and we can also do an SPY overlay. And you can see how stock weak relative to the market on a daily basis. Going to that 5-minute basis, you can see how the stock is selling off the entire day. Let's put up the SPY. SPY never did rally, but this is the price action, exactly what we're looking for. Market gray line, up, 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 up. What did this stock do? Did it bounce? No, not at all. Well, how come? Because there's so many sellers that every buyer that comes in, and there is some natural buying because you've got baskets of stocks being bought by the programs, and you've also got short sellers who, when they see a market bounce, they'll start buying back some of their shorts and taking profits on it. Well, all that little buying pressure because of the market rally has been overpowered by sellers who are just nailing it and nailing it and nailing it and nailing it. That's how you know it cannot even get off the deck with a market rally. That's a sign that there are institutional sellers. That is the tell that I teach. That is the system that we trade. So I'm going to be looking for similar in UAL this morning. You get this nice little market rally on the open. I want to see UAL be sluggish like this. Can't get off the deck. If I get that combination and then the market starts to retreat right away, early in the morning, and I see UAL giving up its bid, starting to sink lower, that is going to tell me that this is an excellent short, and I will take that short position and I will even swing it at this point because I feel that the market is going to head lower over the course of the next few weeks. I just have to be patient with UAL. I have lots of reasons to feel that it's going lower on a technical basis. I've shown you that breached upward sloping trend line. It's through all the major moving averages. It's weak relative to the market. We have all the check boxes marked. So when I do my next video in a few days, I'm pretty sure that UAL is going to be trading lower than its current price of 43.31. So how do I know when it's not the real deal? Well, if the market opens higher today and UAL blows through the 50-day moving average, blows through the 100-day moving average, retraces more than half of this long red candle, and is hovering somewhere around the $45 level, no bueno. We don't like that. We want to know that those sellers are in there pounding, pounding, pounding this stock. They're trying to get out while the going is still good. And a big relief rally like that would send us a signal that it's not ready to short. Even then, a day or two from now, when the market starts to resume its next leg lower, when the stock does sink below the 50-day moving average, that would also be a good entry point. So after 3 long red candles like this, you might see a little bit of retracement. Then you'd want to set an alert right here at the low, just like that. So that's how you would enter the trade. I'm going to assume that market's gapping up today. As long as UAL is below the 50-day moving average, we are going to take that short position. But I would wait at least a half an hour to make sure that the market is not going to rally 50 or 60 S&P points today. But yeah, as long as UAL is below that 50-day moving average, this is going to be a good short position that we can hold for a few days. Thanks so much for watching. Please tell your friends. I have been nailing trade after trade after trade for 2 or 3 months. I think your friends would appreciate the heads up. Thanks so much. Leave your comments. We'll see you soon. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.